All right. Welcome back, everyone, to another live podcast where we will be teaching you how to create your first $1 million portfolio. I'm your host, Jason Brown, and I'll be joined shortly by our special guest, Syd Chase. If you haven't already, please subscribe to the channels. We're currently live on YouTube. If you're joining us from Facebook, make sure you follow the page and like the content, and leave a comment. If there's any topics that you would like to see discussed or topics that we've discussed and you want to go further, do a deeper dive into those, definitely let us know in the comments as well. So while we're waiting on Syd to arrive, I want to go ahead and show you the resources that he has. 3 great books. One is Your Noble Guide to Making Money with Alternative Investments. Definitely an excellent book, which is I wouldn't say like the syllabus, but definitely the topics that he covers in that book. It's what we're going over throughout this series for creating, building your first $1 million portfolio. And here we have the No Bull Real Estate. So this is your guide to real estate investments. Syd is a great investor. At one point in time, he had hundreds of homes, hundreds of doors. He's built homes, currently building a home for one of his clients. And so he definitely can tell you everything about that industry. And then also your daily dose of No Bull. And this has quotes, but also lots of space around that to put down your goals, write your goals down, write your thoughts down, your ideas, and whatnot. So we're going to give Syd a little more time to come back on. So we're going to put the intro back on. But thank you so much, everyone, for joining us. And we'll be right back. Okay, I think we have Syd here, so let me bring Syd to the stage, everyone. Got the background music on. And there he is. There's the man of the hour. What's going on, big guy?
I'm running. For some reason, I thought we were at 5:30.
Oh, oh,
Yeah,
no, at
and
all.
even Julie said that.
Oh, really? It,
Yeah, so that's why I'm running a little late. But we're good. I'm here.
okay, very good, very good. And so I already did short introduction and showed all your resources for everyone. So we started with that. So you're good to go. So for everyone, this is going to be um, for the third episode. This is stock trading 2.0. There was feedback and a demand for Syd to go back in and do a deeper dive into stocks, especially with the charting system that he uses for tracking the stocks, um, for how he's coming up with his particular projections, the markers, how to read the graphings, and all that kind of stuff. So, Syd, did you want to start with your chart, or the floor,
Yeah,
the
we'll
floor is
start right
yours?
from the chart. Let me hope I can do this. I got it right. So I'm going to click on the chart. Can you see the
Okay.
chart?
Um, you may have to share your screen again.
I got to do it again. Oh, yep. Okay. I think it's screen one. No,
I don't know
that's
where. Oh, there's my bottle of water. I got it.
let me go back. Screen two. Yep. Nope. It's screen one. Okay. Screen one. Wow. And how
Okay.
about that?
Yeah, I can see your screen now. So let
Okay.
me.
Should say green screen SJT.
Yep, that looks good.
Yep. Okay. All right. Let me get over to here. First thing we're going to cover, guys, today is the SPY. So when you're looking at stocks investing wise, one of the first things you want to do is look at the SPY. Now I have this in 1 month. So each candle is 1 month. I'm going to take that and switch it to a daily chart. And then
Yep.
I'll zoom this in a little bit so we can see here.
And which platform is this? Just so they'll know.
So I'm actually using TradingView. It wasn't the one I was going to use, but when I realized I was on the wrong time schedule, I quickly threw this one up.
Okay.
Normally I would use a Thinkorswim platform. You can use any platform you have. It doesn't matter if it's Thinkorswim, which is Schwab. You can use a Vanguard if you want to. You could
Right.
use Webull, you could use TradeView. Now, TradeView is what I have in front of myself. TradeView is great. You don't want to trade on it because it's very slow. It's like a third party. But for charting, it's great to use. They have so many tools. I have the paid version, which is, if I remember correctly, like it was either $300 or $600 a year for the max, so that you have all the tools. But there is a
Okay.
free version. So every once in a while, I popped up the free version here tonight, so you may see up in the bottom left corner um, a little ad pop up every once in a while. So you can set up a free account on this and start with this. They will limit you on how many charts you can have up and things like that. But to just get yourself started, this one works great. But if you're going to be trading, you're probably going to be trading on maybe Thinkorswim from Schwab, which is an okay place to get started. Or you could trade on Ninja Trader. That's a direct feed. That's a nice one as well. So any of them will do. So,
Okay.
but so going into let me get this on here. Going into the routine that I do when I'm looking at my stocks. If I'm day trading, I always want to look at the SPY. I don't care too much about the Dow, the Dow Industries, but I do look at the SPY and I look at the QQQ, or what they call the NASDAQ in the market. So those are what the first two things I look at. So if I'm coming here and I'm looking at this chart right here on the SPY, now I took all my lines off for everybody just so we can get a real good idea of how to do this. So just going to come over here to the left, click on this button right here. This should give me a pop-up screen at the top. It turns this into blue. That's the one I want. And so my first lines I'm going to draw, and I've drawn farther ones, but just because of the time tonight, we're going to start from here, and we're going to draw this line right to here as far as I can go. Go a little bit more. So that's the first one. Now, it's not wrong if you do it down here on the tail. You can do it at the tail. You could do it up here if you want to. That's fine. Either one is good. It's not going to be 100% correct. It never is, because the market is fickle. The market is run by a bunch of people like you and me that have all kinds of what I like to call emotions. So nothing's going to be dead on scientifically all the time. So that would be my bottom line, and that would take us back.
So first create that. So first we're creating that bottom line, which is, in this case, because the stock has gone up, we've seen with that bottom line is going to have a tilt upward, right? It's going to be on an incline.
That is correct. Yeah. Like an ascending line. Ascending. Yep.
Say what now?
No, you're right. It's going to have a taper. Yep.
Okay. So why would you suggest someone create that bottom line? Let's say if those extreme bottoms were well enough into the past.
Sure. What you're looking for here is you go back, this line right here is all the way back to October 26, 23. Okay. And then this one is a few months back in July. And so this gives us our trend lines, right? So if you started out on the stock market right here, this is your first day, you're not going to draw this line because you can't, right? Because you don't have the rest of the future in stock, right? But once you started getting this here, right, your first line, you're actually from there. Your first line would have been this one. That's your first line. That's the first line you would have drove. Okay. Gotcha. So, and then your other line
moving downward. Okay.
Yep. So if you woke up this morning and it was this date right here, July 27th, 23, right?
Right.
You would have said, okay, we're at a high, because we go back over here and you can see that we're at a high. There's another level, right? So let's go back. Let me give you a new trace. So you would have been here. You would have saw all this. You could have drawn that level line. So as this stock bounces here, you draw your line across. This line here actually would have done this. Okay, about there, right? Let me get this back out of here. Hold on. Okay. So that's kind of what you would have had. You're trying to draw these lines. And what these lines are telling you, right, is so over here, the stock was higher here, then it tried to go high again and it failed, and then it shorted itself, right? And then it came down, and then it did this, and then this is where you start drawing your lines. You can't draw the line until you get the second point. But once you have that line, I want to show you something here that's kind of cool, right? So you have this little downtrend, then you get this big green bar right there. That's a power bar. And then you start getting these lines, right? So after you drew that first one, there's your second set, right? And then all of a sudden you got this set. And so now you're following this, right? But let's just kind of be cool about this and think about outside of our box a little bit and say to ourselves, oops, sorry about that. If we would have took this off from those first two, this one here and the one behind it, and we just drew this all the way through, because that's the first thing you would have saw.
Right.
Okay. Now, had you not gotten in here, but let's say you either got in here or you got in here, minus this little pullback right here, you'd still be in the stock going up.
Correct.
And that line teaches you to stay in that stock, because unless this stock breaks this line, right, there's no reason for you to get out.
You're still in the positive. Right.
Because what you want to do, what you should be doing here is buying these dips, right? So it goes up, comes back down, goes up again, makes a new high, comes back down, hits that right here where you want to buy. Do the same thing again on these pullbacks down to towards this line. That's where you want to buy. And as long as you already bought, right, and it stays above that line, you're basically in the game. You don't get
Okay.
out. There's no reason for you to get out unless it breaks like it did up here, way to the right here. That
I see what you're saying.
Right.
So starting from the point that you're getting in, as you're tracking it, you really are creating I wouldn't say a litmus test, but you're creating some type of continuum to alert you as to your original starting position and where it currently is, either above that or below that.
Correct. Basically, what that is it's a trend line, and that trend line is telling you as long as you bought at the bottom of the trend line, right, somewhere right here. You wouldn't buy here because you don't know that. You could have bought here. You probably would have bought here on this one, and then as long as you stayed in, there's no, yes, you probably would have got bumped out right here, right? But if you didn't, you'd have stayed in through it. Now, see, for me, because I've been doing this for so long, I didn't get out here. Just so everybody knows, full disclosure, this is one of my stocks that I purchased a long time ago, and I'm still in this thing. So I didn't get shook out here, and here's why. Because I had a line right here. That was my out, right? So
gotcha.
It's a longer story and another class here, but this here is support and resistance, this line. So every time it hits it, it becomes support. When it comes back down to it and holds it, it's resistance, and on the other side, it's support, right? So for me,
your get out point is still higher than your point of than you started, right?
Yep. So maybe I would have shedded a few tiers here, meaning, shed if I had 1,000 shares, for example, maybe I would have said, okay, my rule is if it breaks that line, I need to get out, right? So I'm going to get out of half of what I have, or I'm going to get out of a quarter of what I have, right? And then I'll sit back and wait to see what happens. But for me on this play, I didn't get out because this line for me was still there. I had no reason. I wish I would have bought more down here, but I was too nervous to do it, so I didn't do it. So, but with my initial, I'm still in all the way through this.
Gotcha. Okay, very good.
Yep. So this is the SPY, guys. So on the SPY, this is what you're trying to do, right? The SPY is the Dow is the behemoth, right? But the SPY has over 500 stocks in it. That is the largest piece of pie of the whole market, right? So where the SPY goes, usually everybody else follows.
Okay.
Within general speaking terms for this class that we're having, or this little coffee event.
And what does SPY stand for? Is that related to the S&P?
It's the S&P 500. So it's all it's the 500 largest companies. Not the largest, but the largest in the SPY. It's the 500 largest company. The Dow, which is DOW, they're all your behemoth stocks. They're the ones that've been around the longest, and there's only 50 of those. So 50 stocks, yes, it can move, but the SPY generally moves everything. So if the SPY is doing good, normally everything else is doing good. When it comes to the Dow, the SPY, or the QQQs, which is the NASDAQ. Now, if you go down into the sectors, which is consumers, staples, real estate, bio. I mean, there's a whole bunch. There's like 26 or 28 different sectors, and then you break it down from even there. So I'm not talking about those. I'm talking about these three. If the SPY is going in the right direction, normally everything else that's in the SPY is going to go in the right direction for you if you're betting to go up. So this is one of the first things I do is look at the SPY. The second thing I do, and it's going to be almost identical, is I go to the QQQ. Let's see here. I think it's this one. There we go. And if you notice, it's almost identical to the SPY. Almost the exact same chart.
Gotcha.
Right. So
this is probably the strongest charting method in terms for platforms. Easier to follow, maybe the best user friendly.
Yeah. Once you learn this, the TradeView, once you've learned it, it's very easy to use it, and it has so many tools, much more tools than a regular platform would use. What they don't like about this is that they're not a broker. Their business is charts, right? So if you wanted to trade using their charts, you would have to, it's a long version, I won't go through it, but they list, I don't know, 50, 100 different brokers that they deal with that you can use the broker, but use these guys' charts.
Gotcha.
The issue sometimes you can have with that is there's a little bit of a delay on your order execution. So if you were day trading where you're in and out of a stock in a few minutes,
This
sometimes
doesn't work. Right.
this is not the platform you would want to try to do that on. You want to try to stay with Tasty Trade or Ninja Trader or Thinkorswim. I predominantly use Thinkorswim or Ninja Trader. Now, if I'm long-term trading, right, like my portfolio stuff, meaning my Roth IRAs, things like that, I usually use Vanguard to execute the trades. Right. Yep, I execute my trades on Vanguard, but I use these guys as my charting system because Vanguard charts are just terrible.
And does Merrill Lynch have a charting system as well?
They do, but it's going to be just like Vanguard or any of the other big boys. They're just going to be, it's almost like using analog, bro. It's that far behind. It's just terrible. So I do all my homework on these ones, and if I have anything that I'm trading long term, I do it on, I trade it actually on the platform, but not on here. Now, if I'm trading like a futures where I'm in and out in the day, or I'm day trading like Tesla or Apple or Nvidia or AMD or BA, Boeing, any of those, I usually will trade those on Thinkorswim's platform because it's really nice. Yeah, Thinkorswim is Schwab. Think or swim.
Okay.
Yep, and now that's going to be from Schwab. Schwab bought them from TD Ameritrade, so TD Ameritrade went away.
Swap now. Okay.
Yep. Okay. Yep. So if you're day trading, Thinkorswim is okay to do. If you're swing trading, that's okay. If you want to do your long-term portfolio on those guys are good as well. Just remember that on your long-term stuff that you're holding for a very long time, you want to be mindful of the fees that TD Ameritrade is going to, that Schwab is going to charge you in Thinkorswim versus going directly to Vanguard or Merrill Lynch. Those guys are going to be, their fee charges are going to be less because they're direct.
Gotcha.
So going over to the QQQ, it's the same thing. I would pull this up, look at the daily chart, and I would grab my thing here. And the first one I'm going to do would be this one. And then I follow it right through to here. Right about there. And then the next one is up top here. And then I can get really down and dirty with this and really put some other ones in there, but we'll save that for another night. But basically what you're looking at, guys, is, so if you're trading any of the tech stocks, right, anything like that, they're going to set into the QQQ, which means whatever the QQQ does, that's what the tech stocks are going to do, or vice versa. Okay. So when I'm trading Apple, for example, or if I'm going to trade Nvidia, for example, even though they're posted both on QQQ and on the SPY, I'm looking at the QQQ for my win. But if I'm long-terming it, I want to look at this chart, because what you don't want to do is go in and buy something. Let's say you wanted to buy Apple, and you know Apple's in the QQQ. You look at the QQQ and it's way up here, right? You don't want to buy it there. You want to wait for it to get down closer to this one, right? Then buy your Apple, right? Because then you got all this opportunity to go back up again. So
you're able to chart all these different stocks, even though they have not invested or currently own any of those stocks. They're still able to go in and chart this.
That is correct. Yep. Yes, Jason. So before I'm buying a stock, I look at this and I say to myself, am I at the high side or am I at the low side? Right. So if I'm at the low side, and I want to go long on that stock that I'm thinking about, let's say it's an Apple, right? Then I'd want to buy that here instead of buying it up here, because I guarantee you, I can't pull up an Apple chart on this one. Maybe, hold on one second. Let me see. Can I do it? I cannot do it. Okay, so because I got the demo up. But if I had a QQQ chart over here and an Apple chart over here, I guarantee you that the Apple chart is almost identical to this QQQ chart. And
Gotcha.
if it had you bought Apple to go long, right? So you want it to go up some more. You bought it up here. You are going to go through all of this downturn until it starts going back up again. So what I try to teach people is, and I do it myself, don't buy anything when the main markets are at the highs. You want to buy them when they're at the lows. You can buy in the middle, but one thing I've learned is don't ever diddle with the middle, because you don't know which way it's going to go. Just wait. Use your lines. We're going to keep teaching these lines to everybody. So this is just, don't think this is a crash course tonight. If everybody's interested, we'll keep teaching these lines, and over time you're going to get these, especially if you practice them at home on your own.
Right.
So anyways, this is the QQQ, and then I did the SPY. So now let's kind of take a visual picture of this, everybody, and see what that QQQ chart looks like. Right now, let's just go over and let's do Apple. And that is a right here it is. There's your Apple.
And this is over what span we're looking at?
This
from
is
last year up to
23. Right here's 23.
Okay.
Or May, sorry, or January, sorry. So let's do the same thing. Let's just take these. I'm going to cheat this time. Do this. And then do this. So going back,
those who are listening, for those who are listening, Apple for overall, right, has seen for the long-term play to be a safe bet. It has its highs and lows, but it seems to increase well over time. Would you agree with that, Syd?
I would. So let's just show this one thing that I'm going to show, and then I'll answer that question a little bit better for you. But so I think it was this one right here. I'd have to go back, but it was either this one or this one on the QQQ was the same high. So had you bought that, you see what happened when the QQQ went down, so did Apple. Same exact sound, almost identical. So that's why I'm trying to say, when you're looking at your long term, okay, guys, listen, long term, not day trading, not swing trading, long term trading. This is what you're looking for. Now, on your swing trades, you could use this as well, but that's a much deeper class. But this is what you're trying to figure out is I'm not going to buy up here. I'm going to buy down here. I'm not going to buy up here. I'm going to try to buy down here. So, and so on. Now, so you can see what happened here. This was when, if I remember correctly, this is when all the tariffs and a few more Israel things and that kind of stuff started happening. And if I remember correctly, it was right before their earnings. Yep, right here. E means earnings, right? So
was that April? Was that April of 2025?
Hold on, that's May.
May.
Yep. 4/20, 4/25/30 roughly. Yeah, so almost end of April, right? Okay. And then the D down here, just so everybody knows, if they don't, most people are going to know this, but this is D for dividends. This is E for earnings. If it's in green, it means it's already happened. If it's in purplish color, then it has not happened yet.
Right.
But D means dividend. So if you push on this dividend, if I remember, it should pop up. Yep. So this tells you ex-dividend date, Monday, 5/25/12. They paid 26 cents per share. So hypothetically, if you owned 100 shares, you just made yourself $2.60. If you owned 1,000 shares, 10,000, so on and so forth. So it's not a lot. Apple doesn't have a big dividend, so I don't have it in any of my very, very long-term portfolios. I usually like to get a little bit higher dividend than that. But if I'm going to swing trade this, I'm going to try to exercise that swing trade somewhere in the same time as the dividend so that I'm boosting my returns a little bit. And again,
Right.
that's a whole nother show to go through.
Mm-hmm.
So, all right. So let's look at, is there anybody on that has anybody or anything that they want to look at?
I've been looking to see if there were any questions. I didn't see any come in as of yet. It seems like we get all the questions and comments, the majority of them after. And I think it's because they want to go through the entire video session, episode, I should call it.
Yeah.
And then they get to thinking. Yeah.
Yeah. So let me go back and answer your question from before on this Apple. Hold on 1 second. Get rid of this. Okay. So let's go to a monthly chart.
Okay.
And we'll shorten this up a little bit. So there's Apple's chart all the way back from 1981. Right there. 1980. So January 12th, 1980 is when Apple came alive. And it basically flatlined all the way till, I mean, there is some movement in here. You just can't see it yet. But it basically flatlined all the way until 05. And then that's when it started taking off. And look at what it's done since then. Yeah. So hypothetically, and again, I don't have the tools out to do this. And as we progress through this, we'll be learning ourselves, and I'll be able to have more stuff up. But you guys can do this at home for your homework, and then leave me a message on the YouTube or Instagram or Facebook, wherever all the places are we are watching this. Had you all bought 100 shares or even 1,000 shares at 80 cents, at 80 cents,
when was it 80 cents? What year?
80 cents in 1981.
All right.
And you bought 1,000. Let's say you bought 1,000 shares, so you spent what? $800.
Yeah.
Okay. So now that stock is trading today at $213.25. So subtract that from that and tell me what you get.
So you said it was trading at what now?
$213.25.
So if I have 1,000 shares, then I would have $213,000 right now.
Correct.
Is that correct?
Right.
So each share is
minus your initial, minus your $800 investment.
Right. Minus your $800 investment. So you have a profit margin of $212,200.
Yeah. So now I'm going to make a whole bunch of people cry, right? And we can't do this because we don't have the tool up. But let's go and see so in 20, right here, what date is that? So in Apple has been paying a dividend for the last 5 years. Okay. A little over 5 years, so 5.5 years. So during that 5.5 years, let's see what the first dividend was. It was 20 cents. Now the dividend is 26 cents. So if you took that, and that's why I say it's a lot more to do, but if you took that first one and started compounding all the interest, all the shares that you had,
right?
All that, yeah. It's you're probably, and I'm guessing, so don't hold me to this, but off the top of my head, I would assume that it's probably close to 300 to somewhere between $300,000 and $400,000 you would have had in that period of time. So all of us 80s kids, I'm one that graduated in 81. Had I done that, today I'd be sitting on shy of somewhere north of a quarter and shy of $500,000 on an $800 investment for one stock.
Yeah.
So yes, that's hindsight. I get you guys. I totally understand that, but that's not the point. The point is that if you do not get in the market, you will not have these opportunities. That's the whole point.
You're guaranteed to miss the boat if you never get off the shore, kind of a thing, right? You know.
Correct. Yep. Correct. Yep. So all right. So let's go look at real quick here.
We got time for one more.
One more. Let's look at.
Then we'll be done.
People like AMD. So let's look at AMD. AMD is a little bit more choppier, but let's go to the daily. Now, see, AMD
And for those
doesn't
who
do
don't
this.
know, what is AMD? Is that Amazon? Is that what?
No, AMD is Advanced Micro Devices. So it's the chips that are
Right.
in your computers.
There you go.
Okay. So if you go back to roughly the same time period, starting right here, which is what we did on the other ones, right? So what we're going to do here is take this, we're going to go right here, and then we're going to put another one at the high, and then we're going to take our lines, we're going to draw here. That would have been our first line. That's our second line right here. And
Now, know as I'm noticing as you're drawing your lines, when it trends upward, you're below the stop, right? It's more like a floor that the stock is as it comes down is touching that line. As it's trending downward, you're actually drawing your lines on top of it.
Correct. Yep. So though I'm doing a simple way, the other way is to double this, right? So let me just take this out and I'll show it to you real quick. Hold on.
Okay.
Take this out. Now let's go to this one. So I'll go here down to roughly right around it here. And then here's my second one. So that's how it should be. I'm only drawing one side of it because
Right.
if I'm going long, I'm looking for the upside of this. So I'm looking to where my entries are, right? Because I know I'm not going to get in off the top anywhere. I don't want to do that. I'm looking for if AMD, sorry, pointing with my finger, Jason. If AMD has this line or this point, then it comes to this one, it goes back up and comes back down, I'm going to buy right there. I'm not going to buy on this one because I need that to make my second, my connection of my lines. But on this third one here, I could purchase there and then I would have been able to ride up somewhere up to this spike and then made a decision. Well, I would have got out right here when it crossed over and went down. I'd have been out right here. So on this one, I would have, give me a second.
You would have been out at that top. You would have been out at that top point.
I would have got in there.
Okay, right? Gotcha. Yeah. Oh yeah, those circles help.
I'd have been out somewhere in here, somewhere in here, but out. Yeah, I probably would have took some off here because I know what that candle means. Again, that's more of an advanced charting class, but I know what this candle means. So if I would have got in here for, I don't know, what's the price? 125. So say 500 shares, I would have sold probably half of my lot up here. And then as it came down and created this line, I would have sold the rest of it and got out before this happened. I know I would have done that because of my rules, right? Gotcha. So that's how you would have played that. Now that would have been a good swing trade or a long-term trade. And then if I remember correctly, that is 040124 and my out would have been, so that wouldn't even been 2 months, a 2 month trade. Okay, so you got your math calculator out there. Let's do this. Let's say that I got in for, we'll do 500 shares. Okay. We got in for $135.66.
Okay, so that means that cost you $67,830.
Yep. And I'm going to tell you how you can afford to do that. So don't get scared, folks. Then let's say I got out on this red candle right here and I got out at 163.12. What's the difference?
And that is 81,560. So the difference at the 67,830 will give you 13,730.
So for about 2 months worth of holding a stock.
Not bad.
That's not bad.
Because if you got in at 67,000 and even at a 10% return, you're looking at 6,000. I would say 6,700 per month. So you would have hit that mark because 6,700 per month, that would have put you at 13.4. Yeah, and you got out earning 13.7. So I mean, you were right there. You see what I'm saying? If you were looking
Yep.
at 10% return, your initial buy-in,
Yep.
and over 2 months, yeah, you would have hit
Yep.
10% return in 67,000.
So you said it was about a 10% return.
Yep. It's
Okay.
almost spot
So
on,
now,
right? Almost exactly on.
yep. So now we'll end tonight with this saying. So this is how you afford that, because I know people are either one listening now or two are going to be listening in the future and go, "There's no way that I have that much money to buy 500 shares of that." First of all, you don't need to buy 500; just buy 100. Yes, the numbers are going to be different, but you're still going to make your 10%, right?
Right.
That's the whole point, right? It's not about how much you put in all the time. You'll get there, but there's this thing called margin, right? Now, with margin, you have to be careful, and we can teach a class on that. But margin will allow you to buy. So if you how much did you need? 67,000.
$67,830.
Okay, so if you put $10,000 into a margin account, nope, $5,000, 5,000, no, 10,000, $10,000 into a margin account, and they're going to give you, depending on what broker it is, they're going to give you anywhere between 6 and 9 times that in margin.
Okay.
Okay, so if it's 9 times that, it's 180,000. If it's 6 times that, it's 60,000 ish, right? So my point is, you're going to lose about 2% of the 10% by borrowing the money from them to make that deal, because you're borrowing that money from them to make this deal. So when you're done with it, you have to pay them back. They're going to take that out of your proceeds.
But it still puts you in a position to invest money that you didn't originally have, so that you could profit, even though they're taking the 2% away. You're still in good position.
Correct. You're still making 8%. Where else are you really going to do that? Now I know that the charts or not the charts, but the feed is going to get swamped with real estate this and whatever they're going to say. But and I'm not saying that you can't make it in other places, but you're not going to normally make that without taking a huge amount of risk.
Exactly.
And number one, and number two, nobody else is going to allow you to borrow. Look, if you came to me, if Jason, and I know you have a real estate background, but we're going to skip all that. And you come to me because you know that I'm the guy who's flipped over 2,000, 2,500 properties in the last 35 years, yada, 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 right? You come to me and say, "Hey, dude, I have got this deal. It's a home run. It's a smoker. I just need the $300,000 or whatever that number is. We'll say it's $100,000. I need that because I can't go out and get a loan because nobody trusts me. I don't have a track record, yada, yada, yada." So the point I'm trying to get at is, even if you came to me, I would say, "Yeah, it's a great deal. Here's what I'm going to do. I'm going to take the deal from you. I'm going to go do it because I know what I'm doing. And then I'm going to pay you a small percentage off of that. That's how I'm going to feed you." But here, they're not going to ask those questions. They're just going to loan you the money. Now, again, let's be the big disclosure, a big red flag that is, don't go out and margin what you can't afford to pay. If you're goofy enough to allow that stock to drop past your stop losses, they will call that margin in and you will owe them. So there's things that you need to be careful with in doing this. So, but the point I was really trying to get at here is that even if you took that trade with $100, right, or 100 shares, you still have made your 10%.
Yeah, and I think what they gain with such a low risk amount as they're at their initial position is you're gaining the experience.
Correct.
And you're gaining the patience. I think that's one of the key things that you're developing when you're beginning to look at the stocks and do the trading is your patience. A lot of people bailed out of things prematurely, right?
Correct.
Just because they had a day trading energy while handling long-term plays, right?
Correct.
And yeah, you don't want that.
Drawing those lines will help you stay in your long-term trades.
Yeah,
they will. Day
I
trading
like
is
that.
completely the opposite, and maybe down the road a little bit, you and I'll do a live day trading. I'll trade live on day
Okay.
trading. People
Okay.
can see
I'll put
what
that
the
down too.
difference is between live day trading and swing trading or long term trading.
Yeah. And just to let to wrap it up, let everyone watching and listening know we are working on building a community where you will be able to pay a small fee at different tiers of membership so that you can have even more access to Syd, to the resources, to the content, and even to be able to get a one-on-one consultation or coaching from Syd when it comes to day trading video, for example, that he just mentioned. That will be something that'll be a part of that community that you'll be able to join. So more information is coming out to that. Syd and I have been talking about that, and we're going to continue to double down on dot some I's and cross some T's before we launch that. We're looking to possibly do it on school. Syd and I will talk more about that, but that's what I've seen as being the best platform for creating that community, being able to handle subscription at different tiers. Patreon is good, but not so much with all the resources that we're going to be making available to that community. So yeah, so stay tuned on that. But yeah, Syd, this was good. This was good. I think with even within that community, man, we could just have like a whole category of just stock videos, right? Where you're just like going
Well,
through.
I think the goal there, Jason, is to have a community of stock traders, community of real estate traders, community
Yes.
of gold and silver traders, and so on and so forth, so that
Yeah.
they're not kind of getting mixed up. And then we could have a room. It can be a little dicey, but because I've been in these rooms before, where it's one room is general talk, which
Gotcha.
creates everything. You're talking
Yeah.
about everything. But some people who are, you get your diehard stock traders, they don't give two cents about real estate.
Right. Right. Right.
And your hardcore real estate guys and women don't care about the stock market, and unfortunately for them, it's completely wrong, right? I don't care which one you pick to make your money, but you need
Right.
to, going back to those godly 7 streams of income, right? You need to do that, right? Sorry about that. You
And
need to
that's what I
do
was
that.
thinking. Those 7 strings that you mentioned several times could be like those communities. And I'm trying
Correct.
to figure a way. I'm basically trying to figure out a way of like imagine putting it into a house, right? That's the community, and then each one of the revenue streams is like a different bedroom,
Right.
or like a floor of an office, and you have all these different doors. So you got the real estate door, stock trading, the farming, gold, the silver, the entertainment, et cetera, et cetera. So yeah, and once I have it down on how to create that first room, then I can duplicate it again for that second room, and now be able to measure the efficiency of the crossovers and whatever, and then boom, we just take it to the moon after that. So
Exactly. Yep.
and we just bringing value. We're bringing value that people can have at their fingertips. They can watch, they can listen, they can learn, and it's all going to be at a very affordable price.
Yep.
As always, Syd has always said it. I always said it. Do your research, do your reading. We're just here showing you how to track things and things like that. But what you invest in, if you really want help with that, reach out to Syd Chase. Is it sydchase.com, correct?
Yep.
Yeah.
SydChase.com, or just email me at sydchase@gmail.com.
Yeah. And you can hire him for consultation, coach, all that kind of stuff. If you want to,
Yep.
most definitely, you have his information there. So, all right, Syd, I think that's our time, buddy. We're
Sounds
good to
good.
go. You
Thank
like
you,
I like to
everybody.
keep it nice and short in respect for your time. All right, very good. So everyone, we want to thank Syd Chase for coming on again. Thank you so much once again. His 3 books, Your Noble Guide to Making Money with Alternative Investments, which we've basically been going through. Also, Your Noble, there's the camera, Noble real estate guide. This is simply excellent. And one of my favorites is your daily dose of no bull, because it has, and I'll skip through so you don't see any of my comments or anything, but you have your daily reading, and he has a lot of margin space there for your ideas, your thoughts, your plans, and all that kind of good stuff. So, yeah, we appreciate you, Syd, and we'll see you in 2 weeks, but I'll be posting information after we get together on that community. Sound good?
Sounds good. I'll see you guys. Take care, everybody.
Okay. Thank you so much, Syd. And thank you, everyone, for joining us again. Hope this has been of awesome value to you. I know that it has been, because Syd is just a man. Syd is just a man. Also, too, coming up, I will drop information about the millionaire dinner. We had it last year. It was an overwhelming success. We had 7 millionaires at this private dinner, and they were dropping all the gold nuggets. And it's well worth 10 times what you pay to be in that room. So, peace and blessings to everyone. And I'll check y'all on the next one.